Welcome back, and joining me for a closer look at what's played out on the market scene today is Faheema Adia from Momentum Securities. Thank you so much for your time, Fahia. We started off the morning seeing turmoil still in the market with sharp losses, particularly in the Asian markets. And even the JSE in morning trade was down about 2%, but quite surprisingly, it ended off in green territory. What's happening there? Why that big turnaround?
Evening, Sinazo. Yes, it was quite surprising to see it started off quite weak this morning, and at the last minute we just saw it in the green. So it looks like what really drove that was recovery in the PGM stocks in particular.
Yes.
We also saw some recovery in the financial sector after both of those were quite oversold. So on Friday we saw a massive sell-off in the PGM stocks. We also saw the banks a lot lower during the course of last week. So I think it was a bit of an overreaction, and that's why we're seeing some recovery now. And then, like you said, the Hang Seng was down almost 13%, which is a massive fall in just one day.
I'm actually wondering that big gain that we saw with the PGMs, is that something, is it maybe that markets are seeing that the tariffs aren't really going to hit them as much as had initially been anticipated, or just people just bargain hunting at this point?
So I think on Friday, there was that massive overreaction with the PGMs because of the automotive tariffs. So what happened was the market realized that the U.S. consumer will have likely less demand for vehicles due to the tariffs. But bear in mind, the U.S. consumer is not the only consumer of automotives. So because PGMs are used in autos, in the internal combustion engines, that's why it had an impact on PGM stocks in particular. But I think the market's come to its senses today and have realized it was a bit of an overreaction.
And also another interesting one is that we've seen major losses on Naspers and Prosus, particularly today. And I'm wondering if that is a China story.
Yes, definitely. So because of the investment in Tencent, if you look at the Tencent share price, that's off more than 10% today. And again, that's just because of the broader sell-off that we saw in the Hang Seng and in China. And it's just been driven largely, I would say, by sentiment. Because if you look at Tencent, the US isn't a significant market for it. I would say it's largely more focused on China, Hong Kong, and Europe. So it just is negative sentiment at this point.
Or maybe that people are also just worried about the Chinese economy at this point with the reciprocal tariffs. China definitely responding accordingly to the US. Let's take a look at some of the news that came out of the JSE. It seems that results season has cooled down, but Sirius real estate coming out with a year-end trading update today, saying that they've seen solid increase in rent roll. And what was actually quite interesting is that on a like-on-like basis, for 11 consecutive years, they've seen growth of over 5% there. Also seeing optimism in terms of the impact of the increased spending of defense and infrastructure in Germany, one of their markets. But I was wondering why the stock was down that much, or maybe it was just caught up in the general market sell-off.
Yes, I agree. I think it was quite a good trading update. Like you said, like-for-like rental income increase. And if we look at the rental income from acquisitions over the past year, that was also quite good. They've done a lot of acquisitions in the past year. That pipeline for acquisitions going forward is also quite strong. If you look at the occupancies in both UK and Germany, that's also shown improvement. And like you said, they're expecting to see pretty strong recovery in the German economy on the back of this fiscal stimulus. So I do think it's probably the broader market sell-off that's impacting this. But if you look at it now, it's on quite an attractive dividend yield of about 6%. So that's actually much higher than the Euro bond yield at the moment. So definitely, I would say an attractive investment opportunity for income investors.
All right. Well, quickly before we get to your stock pick, I also saw something interesting, and there's been a lot of portfolio repositioning over the last week. Some asset managers offloading some of their stakes in certain companies, and others picking up more of the shares. And interestingly, for Omnia, I saw that Ford Asset Management actually just offloaded some of its stake, where now they hold 4.98%, still significant. But I'm wondering if there's anything to read into that.
I think so. So if we look at the performance of Omnia year to date, it's been quite weak. And what's driving that is that weaker chemical price. So they do have exposures to chemicals. And now that explosive side of the business, they're trying to internationalize that. They've recently opened businesses in Canada. But now they're facing headwinds given these US tariffs, and if they will be exporting to the US, that will be problematic. So I think given those headwinds, and also because Trump is taking a more hostile approach on ESG, it will probably have an impact on the agricultural side of the business supplying the US too.
All right. Well, let us get to where you are seeing opportunity today. Your stock pick.
So it's a tough one given the volatile market environment, but that's why I'm leaning towards something in a defensive sector. So non-discretionary food retail, the leader there, of course, is ShopRite. There's been quite a pullback recently, so if we look at the valuation now, it's looking attractive. It's now on a forward P of about 16 times. So it's better than the likes of Boxer, which is trading at about 18 times. So I just think it's offering value at these levels. And if we do see the world go into a global recession, these types of stocks should hold up relatively better.
All right. Well, thank you so much for your time and for your insights on what has moved investor money today, and for joining us in studio, Faheema. That was Faheema Adia from Momentum Securities.